Welcome back to the Wall Street Podcast. Today we're digging into the August 25th, 2025 edition of the Wall Street Journal. We'll be pulling out the key insights on the Fed's view of the labor market, what's happening in tech and AI, and some important corporate and regulatory moves. The goal, as always, is to cut through the noise and give you the most critical takeaways. So, first up, the Fed. Reports from Justin Lahart and Nick Timiraos suggest the labor market is really front and center for them now.
That's right. Unemployment's still low, and we aren't seeing mass layoffs, but, well, hiring is definitely slowed down quite a bit.
And didn't the July numbers get revised down?
They did. Significantly weaker job growth than first reported. It adds to this cautious feeling. Fed Chair Powell actually called the labor market curious. That's the word he used.
Curious.
Yeah, and it signals a possible rate cut may be coming in September, even though inflation isn't quite back to that 2% target.
So what's behind that? Is it this labor hoarding idea?
Partially, yes. Companies are hesitant to let people go in uncertain times. But that creates its own problems, It makes it harder for younger people entering the workforce, and it seems to be cooling wage growth, especially for lower-income workers.
And the Conference Board data supports this view.
It does. They reported about 1 in 5 U.S. employers are planning to slow down hiring in the second half of this year.
Okay, so Powell sees it as curious, maybe hinting at underlying weakness. But you've got others, like Cleveland Fed President Beth Hammack, questioning rate cuts.
Exactly. She's pointing to rising inflation again, and businesses, well, seeming to test their ability to raise prices.
So is the Fed risking looking inconsistent here, or are they trying to get ahead of a potential problem?
Well, Powell seems focused on that underlying weakness, maybe declining worker supply and demand. The risk they might see is things deteriorating fast if layoffs do pick up. But Hammack's view highlights the real tightrope they're walking. There's definitely potential for a policy misstep either way. It's a genuine debate inside the Fed.
All right, let's shift gears to tech and AI. Reports by Matt Barnum and Asa Fitch suggest a murky outlook.
Murky is a good word. Even for the big names, the Magnificent Seven, some investors seem to be trimming their positions.
Why the caution? Is it AI not living up to the hype cycle?
There are signs of that. We're hearing about OpenAI's GPT-5 and Meta's Llama 4, maybe plateauing a bit in capability gains.
Yeah.
Sam Altman at OpenAI even made a comment comparing some of the current enthusiasm to the dot-com bubble.
Okay. And what about actually using AI in business?
Big challenges there, too. Concerns about data leaks, AI making things up, those hallucinations, and an MIT study reported something quite stark.
Oh.
A 95% failure rate for custom AI pilot projects. 95%.
Wow. That's huge.
It suggests maybe the value isn't in these giant bespoke systems right now, but more in adapting existing models.
But it's not all negative. I saw something about Google's Pixel 10 making strides.
Right, that's a counterpoint. The Pixel 10 seems to be really pushing ahead of the iPhone on built-in AI features. Things like Magic Queue for your inbox, real-time voice translate that clones your voice, even an AI camera coach.
So you have this seeming slowdown in breakthrough AI models, but then huge investments still happening. Bank of America, for instance.
Exactly. Despite the plateau concerns, the investment is definitely there. Bank of America's tech chief, Hari Gopalkrishnan, mentioned a $13 billion budget just for AI.
$13 billion, but returns aren't expected immediately.
No, he noted returns are probably more in the 2026-27 timeframe. The focus seems to be shifting towards adapting these powerful models for very practical business tasks. Think companies like Paradigm, using AI for data analysis, trying to challenge tools like Excel. It's about integration and tangible results now, maybe less about the next giant leap.
Okay, let's broaden out. Beyond the Fed and big tech, there are other corporate and regulatory things bubbling up that have real-world impacts.
Definitely. For instance, Spirit Airlines is facing a serious cash crunch. Projected profits for 2025 just didn't happen. Now they're looking at losses and exploring strategic alternatives.
Right. And FanDuel is getting into financial betting.
Yeah, partnering with CME. They're launching event-based contracts, basically letting users place yes or no bets on things like where the S&P 500 will close.
That sounds legally interesting.
It is, described as murky legal waters. It sort of blurs the line between betting and financial markets.
And politically, we're seeing impacts too. DEI programs.
Yes, the focus on eliminating diversity, equity, and inclusion programs is causing scientists applying for federal grants to actually change their language. They're removing terms like diverse or underrepresented from renewals to avoid scrutiny. particularly from the NIH.
And changes in Puerto Rico's oversight.
The president fired most of the Federal Financial Oversight Board members, citing inefficiency in getting the island back to the markets post-debt restructuring.
And finally, something hitting homeowners directly: AC costs.
Right. New EPA rules on refrigerants, kicking in January 1st, 2025. They have apparently added about $1,500 on average to the cost of a new AC system.
Pushing total replacement costs up quite a bit then.
Yeah, reports suggest total costs are now often in the $13,000 to $14,000 range. A significant jump.
So if you pull back, what are the wider implications of these shifts for people listening?
Well, the AC costs are an obvious direct hit to household budgets. That's pretty clear. The changes in grant language for scientific research, though subtle, could eventually shift what kinds of medical research gets funded, potentially impacting certain health issues or communities down the line.
And the FanDuel move.
It opens up new ways for people to engage with or maybe speculate on financial markets.
Yeah.
But the legal uncertainty is real and could play out for a while.
It really shows how these big economic forces and smaller policy decisions connect to daily life, doesn't it?
Absolutely. That low-hire, low-fire job market affects careers. Rising appliance costs hit the wallet.
Even things like research funding priorities eventually ripple outwards. So as we watch all these forces interact, the Fed's curiosity, the AI evolution, these regulatory tweaks, what other unexpected, perhaps curious outcomes might emerge, something for all of us to think about.